The road to wealth is often painted with the brush of luck or sudden opportunities. Many people see the rich as those who stumbled upon success by chance or inheritance. The general belief is that they were either born into wealth or had access to resources that others simply couldn't reach. However, the true secret behind how millionaires grow their wealth is much more deliberate and achievable than most people think. What if I told you that the key to becoming wealthy has nothing to do with luck or inheritance? What if it was simply about following a proven strategy, one that involves discipline, patience, and long-term thinking? In reality, becoming wealthy has far more to do with the decisions you make and the habits you form than the initial circumstances you are born into. Millionaires follow a strategy that is not just about earning more, but about making smarter financial decisions over time. It is not the flashy, overnight success people dream about. Rather, it is a slow, methodical process that requires consistency and focus. Most people believe that the key to wealth is earning as much as possible. High salaries, massive incomes, and multi-million-dollar contracts are what come to mind when people think about wealth. While income is certainly important, it is not the deciding factor. There are countless examples of highly paid professionals, doctors, lawyers, and athletes who, despite their high earnings, end up broke or living paycheck to paycheck. This happens because wealth is not about how much you make. It's about what you do with the money you earn. Many people think that increasing their income will automatically lead to wealth. So when they get a raise, a promotion, or a new job, they increase their spending to match the extra money coming in. They buy a nicer car, a bigger house, and start living a more luxurious lifestyle. While this may feel good in the moment, it's one of the primary reasons they stay stuck in financial struggles. Wealth is built through controlled spending. Millionaires understand that the key to growing wealth is not in earning more, but in managing what they already have. They spend less than they earn, always staying within their means, and they make conscious decisions to save and invest rather than splurge on temporary pleasures. One of the most important concepts that millionaires understand is delayed gratification. It's a habit that they practice consistently. Rather than giving in to the instant desires of today, they make sacrifices now for the rewards of tomorrow. While the average person may spend their entire paycheck on the latest tech gadget or a vacation, millionaires are putting their money to work, investing it in things that will grow in value. They make the choice to say no to the instant pleasures that come with spending money and choose to delay gratification so they can achieve long-term financial success. This might mean driving an older car or living in a smaller home, but over time, the compounded effect of investing that money instead of spending it leads to greater wealth. For most people, money is something to spend. But for millionaires, money is a tool. It is a resource to be used for long-term goals, for growing assets, and for creating security and freedom in the future. Millionaires have a different perspective on how to view money. Every dollar they earn is seen as an opportunity to build wealth. Instead of thinking, "What can I buy with this money?" millionaires ask, "How can this money work for me?" They understand that their money should not be sitting idle. Instead, it should be working to generate more income. This mindset is what differentiates them from the average person who spends money without thinking about its potential to grow. Millionaires invest their money in a variety of ways. They may invest in stocks, real estate, businesses, or other ventures that have the potential to generate returns over time. But before they make any investment, they evaluate it thoroughly, ensuring that it fits their long-term goals and that they can manage the risks involved. They don't look for quick wins. They are patient and understand that true wealth comes from long-term decisions. A major part of a millionaire's strategy is control. They focus on controlling their spending, managing their debt, and carefully planning their investments. They make sure that every dollar is accounted for and that it is working for them in the best way possible. For example, millionaires don't rely on just one source of income. They create multiple streams of income that can sustain them even when one source falters. Whether through side businesses, investments, or rental properties, millionaires know that the more ways their money can work for them, the more secure their financial future will be. Most people think wealth is about accumulating a large sum of money. Millionaires, on the other hand, understand that cash flow is just as, if not more important. Cash flow is the money that consistently comes in to cover your expenses, invest, and grow your wealth. It's not just about having a big bank balance at one point in time. It's about having a reliable and growing stream of income over time. Having multiple income streams ensures that you are never reliant on just one source of income. This could come from a business, dividends from stocks, rental income from real estate, or royalties from intellectual property. Millionaires constantly work to increase their cash flow, which in turn gives them more freedom and flexibility in their financial decisions. The key here is that cash flow is king. Without it, wealth is hard to build, and it's much easier to fall into financial stress. Now that we understand the importance of income, spending control, and cash flow, let's talk about the key to growing wealth: investing. Millionaires understand that they cannot build wealth by simply saving. Saving is essential, but it's investing that will grow your wealth over time. But here's the thing: they don't invest in just anything, they invest strategically. Millionaires carefully research each investment opportunity, looking for long-term gains rather than short-term profits. They focus on investments that will provide consistent returns and have the potential to appreciate in value over time. Real estate is one of the most reliable forms of investment that millionaires use. They buy rental properties, commercial properties, and land that will appreciate over time. Real estate provides not only long-term growth, but also consistent cash flow through rent. Millionaires are active in the stock market, but they don't gamble on high-risk stocks. They focus on solid, stable investments that can provide consistent returns over time, like blue-chip stocks and bonds. They may also invest in index funds that track the overall market, giving them exposure to a broad range of industries. Some millionaires start their own businesses or invest in startups. They know that owning a business is one of the best ways to generate wealth. However, owning a business comes with risks, and millionaires are skilled at minimizing those risks through careful planning and management. One of the most important habits that millionaires practice is living below their means. While it may be tempting to buy the latest luxury items or live in a mansion, millionaires prioritize wealth creation over appearances. They understand that wealth is built over time, not through flashy spending. This doesn't mean that millionaires live modestly or never enjoy luxury. It means they are smart about when and where they spend their money. They make sure their lifestyle choices align with their long-term financial goals. The secret strategy millionaires use to grow their wealth is not about earning as much money as possible. It's not about relying on luck. It's not about following the latest trends or trying to get rich quickly. The strategy involves patience, discipline, and long-term thinking. It involves making smarter decisions with money, investing wisely, and ensuring that every dollar works to build wealth. In the next part of this series, we will explore how millionaires actually deploy their money, how they protect it, and where they put it to make it grow without fear or uncertainty. We explored the foundation of how millionaires build their wealth. We discussed the importance of controlling expenses, delayed gratification, and investing strategically. Now, we're going to dive deeper into the actual ways millionaires deploy their money, how they protect it, and how they grow it continuously. Building wealth doesn't stop once you've built a solid foundation. The true secret lies in what you do with your wealth once you have it. Millionaires understand that growing wealth is a continuous process. They don't rest once they've hit a certain milestone. Instead, they continue working smarter and making their money work harder for them. One of the most crucial decisions millionaires make is where they choose to invest. Their wealth isn't confined to just savings accounts or bonds. They focus on investments that offer consistent returns, capital appreciation, and even tax advantages. The key is to invest in assets that grow over time, even when the market fluctuates. Real estate is a primary vehicle for wealth creation among millionaires. Unlike stocks, which can be volatile, real estate tends to appreciate steadily over the long term. Millionaires use real estate as both a cash flow generator and a long-term wealth accumulation strategy. Here's why they do it. Appreciation. Real estate generally increases in value over time. Even in periods of market slowdown, the value of property typically rises in the long run. Millionaires buy homes, commercial properties, and land with the expectation that their properties will appreciate in value. Rental income. Investing in rental properties is a popular strategy. By renting out properties, millionaires generate a regular stream of income that can be reinvested or used to pay down any existing debts. Tax benefits. Real estate investments come with tax advantages. In many countries, real estate investors can deduct expenses like property taxes, insurance, and maintenance costs from their taxable income. Depreciation can also significantly reduce tax liability, providing additional financial benefits. Leverage. Another key advantage of real estate investing is leverage. Millionaires don't need to pay for an entire property in cash. They use financing to acquire properties and leverage the bank's money to make more money. The more properties they own, the more cash flow they generate. For example, instead of spending $500,000 of their own money to buy one property, they might put down $100,000 and borrow the rest. As the property appreciates in value, they build equity in the property, which they can then use to buy more properties, increasing their wealth exponentially. Stocks and bonds are another major area where millionaires deploy their wealth. However, they approach these investments with caution and a long-term view. Millionaires understand the difference between speculation and strategic investing. Stocks. Millionaires invest in stable blue-chip stocks that offer consistent returns over time. They focus on companies that are not only profitable but have a history of growing dividends, which can be reinvested to compound wealth over time. They also diversify their stock holdings across sectors, ensuring they are not overexposed to any one industry. For example, they might invest in tech stocks for growth, while also putting money into consumer staples or healthcare stocks for stability. Bonds. While stocks provide growth potential, bonds offer stability. Millionaires often balance their portfolios with bonds that generate regular income while offering lower risk than stocks. Bonds are a safe way to preserve wealth while earning interest. Index funds and ETFs. Many millionaires choose low-cost index funds or exchange-traded funds, ETFs, that track the performance of the entire market. These investments offer diversification without the need to pick individual stocks. By investing in index funds or ETFs, millionaires get exposure to a wide range of companies, ensuring that even if one or two perform poorly, the overall portfolio remains stable. Owning or investing in a business is another powerful strategy that many millionaires follow. Unlike stocks or bonds, businesses provide active control and the ability to scale and increase profits rapidly. Millionaires often become entrepreneurs or investors in businesses that have high growth potential. Here's how. Starting a business. Some millionaires prefer to start their own businesses. They see opportunities in industries that others overlook and invest time and money into building something from scratch. Whether it's technology, services, or even retail, business ownership provides the chance to directly control their financial destiny. Investing in startups. Others may invest in high-potential startups that show promise but need capital to grow. Angel investing or venture capital allows millionaires to put money into businesses with a lot of upside potential. However, they are careful to conduct due diligence before making an investment. The key to successful business investing is risk management. Millionaires don't put all their money into one business venture. They diversify across different industries and business models to ensure that even if one fails, they have others to fall back on. While deploying wealth into various investments is essential, protecting that wealth is equally important. Millionaires are keenly aware of the risks they face, whether it's market volatility, inflation, or unexpected financial emergencies. To protect their wealth, they take several measures to ensure their assets are safe from significant losses. Insurance is one of the first lines of defense millionaires use to protect their wealth. Millionaires typically have a range of insurance policies to safeguard their assets, including life insurance. In case of an untimely death, life insurance ensures that loved ones are financially protected and that the estate is preserved. Some millionaires use permanent life insurance policies, which also build cash value over time. Property insurance. Millionaires ensure their real estate investments are covered against natural disasters, accidents, and other liabilities. Liability insurance. For business owners, liability insurance protects them from lawsuits that could wipe out their assets. This is critical for high-net-worth individuals with large businesses or investments. While insurance premiums might seem like an unnecessary expense, they act as a safety net, preventing unexpected events from draining wealth. One of the most important aspects of wealth protection is estate planning. Millionaires often create trusts, wills, and other legal structures to ensure their wealth is passed on to their heirs without excessive tax burden. Estate planning minimizes the risks of inheritance disputes and ensures that their wealth lasts for generations. Trusts. Trusts allow millionaires to transfer their wealth in a way that avoids probate. reduces estate taxes, and ensures that their assets are managed according to their wishes. Wills. A will is crucial for outlining the distribution of assets after death. Without one, heirs may face legal battles, losing both time and money. Gifting. Millionaires often give away portions of their wealth to family members or charitable organizations, reducing their taxable estate and helping loved ones or causes they care about. Through effective estate planning, millionaires ensure that their wealth is transferred smoothly, and the wealth-building cycle continues for the next generation. Taxes are often one of the most significant drains on wealth. Millionaires are not tax evaders, but they understand the importance of tax strategy. By working with accountants and financial advisors, they structure their investments and income streams in a way that minimizes their tax burden. Tax-efficient investments. Millionaires often invest in tax-advantaged accounts, such as IRAs or 401ks, to defer taxes on their investment gains. They also use municipal bonds, which are often exempt from federal taxes. Capital gains taxes. Instead of frequently buying and selling assets, millionaires focus on long-term investments that minimize capital gains taxes. Holding investments for longer periods allows them to take advantage of lower tax rates on long-term gains. By strategically planning for taxes, millionaires keep more of their wealth and ensure their investments grow without unnecessary losses to taxes. The final secret to wealth growth for millionaires is diversification. They know that putting all their eggs in one basket is risky. Diversifying investments across multiple asset classes, industries, and geographic locations ensures that if one investment falters, others continue to grow. Millionaires also reinvest the returns they earn from their investments. They don't spend their profits. Instead, they use the returns to buy more assets and grow their wealth further. By reinvesting their profits, they create a cycle where their wealth grows exponentially over time. We explored the foundations of wealth building, how millionaires deploy their money, protect it, and make it grow over time. We covered everything from real estate and investments to risk management and tax planning. We're going to uncover the most critical factor in their success, the mindset and habits that help. Millionaires not only build their wealth, but also sustain and grow it over decades. Wealth is not something that happens overnight, nor is it something that remains stable if you are not constantly nurturing it. Millionaires understand that the journey to wealth is a lifelong pursuit. They cultivate the right mindset, develop good financial habits, and stay focused on long-term goals. Let's dive into how you can adopt these principles for your own financial success. One of the most significant characteristics that set millionaires apart from others is their growth mindset. This concept, popularized by psychologist Carol Dweck, is rooted in the belief that skills, intelligence, and success are not fixed but can be developed through hard work, dedication, and learning. Millionaires have mastered this mindset and apply it consistently in their financial lives. A growth mindset is the belief that your abilities and intelligence can be developed through effort, learning, and perseverance. It contrasts with a fixed mindset, where individuals believe that their qualities are set in stone. People with a fixed mindset might say, "I'm just not good at finances," while those with a growth mindset would say, "I can improve my financial knowledge and grow my wealth." Millionaires consistently demonstrate this mindset in their financial decisions. They are not afraid to take calculated risks, try new investments, or adapt to changing market conditions. They are lifelong learners who view challenges as opportunities to grow, not as insurmountable obstacles. This mindset fuels their ability to bounce back from failures and keep moving forward with their wealth-building strategies. To develop a growth mindset, start by embracing challenges. View obstacles as opportunities for learning, not as failures. If you make a bad investment or experience a financial setback, don't let it discourage you. Instead, analyze what went wrong, learn from it, and apply those lessons to future decisions. Over time, this mindset will help you build resilience, and you will become better at managing your finances and making smarter investment choices. While having a growth mindset is essential, patience is just as critical to sustained wealth creation. Millionaires do not expect to get rich quickly. Instead, they understand that true wealth is built slowly over time through consistent, strategic decisions. Building wealth is not a sprint. It is a marathon. While it's easy to get caught up in the desire for fast results, millionaires focus on long-term gains. They understand that the earlier they start investing and making smart financial decisions, the greater their wealth will grow due to the power of compound interest. For example, imagine you invest $5,000 at an annual return of 8%. After the first year, you'll have earned $400 in interest. But in the second year, you'll earn interest not just on your initial $5,000, but also on the $400 you earned in the previous year. Over time, this compounding effect can turn small investments into substantial sums. Millionaires are willing to wait for their investments to mature. Whether it's real estate, stocks, or businesses, they don't rush their returns. They stay patient, knowing that steady, consistent growth is the key to long-term wealth. To build wealth with patience, avoid the temptation of quick returns or get-rich-quick schemes. Focus on investments that are likely to provide steady returns over the long term, and don't expect instant results. Instead, aim for gradual growth and let your wealth compound over time. As you do this, your wealth will grow exponentially. In addition to having a growth mindset and practicing patience, millionaires understand the importance of consistency. While some people may work hard for a year or two and then slack off, millionaires make wealth building a habit, consistently making smart financial decisions day after day, year after year. Consistency is essential in wealth building because it leads to momentum. If you commit to saving a certain percentage of your income every month or investing regularly in stocks, real estate, or other assets, your wealth will grow consistently over time. Even small contributions add up. The key is to stick to your financial plan and avoid impulsive decisions based on short-term market fluctuations or emotional impulses. Millionaires also use consistency to stay focused on their goals. They set specific, measurable financial goals and work towards them regularly. Whether it's increasing savings, investing in the stock market, or acquiring additional assets, they take consistent action toward achieving their financial objectives. To develop consistency, create a detailed financial plan that includes both short-term and long-term goals. Break down your goals into small, actionable steps. For example, instead of setting a goal like become a millionaire, break it down into smaller targets, such as save $500 a month for the next year, or invest in 2 rental properties by the end of the year. Set a schedule for when you'll work on these tasks and make them a regular part of your routine. For example, set aside time each week to review your finances, track your investments, and adjust your budget if necessary. Over time, these small steps will add up, and you'll begin to see the compounding benefits of consistency. Millionaires never stop learning about personal finance and wealth-building strategies. Financial literacy is a lifelong pursuit, and they consistently invest in their education to make better financial decisions. By understanding the principles of money, markets, investments, taxes, and risk management, they are able to make more informed decisions that grow their wealth over time. Financial literacy is essential because it allows you to make decisions that align with your long-term goals. Without a solid understanding of basic financial principles, it's easy to make costly mistakes. For example, many people take on too much debt without understanding the long-term consequences, or they invest in high-risk assets without understanding how to mitigate risk. Millionaires understand that financial education is the key to managing their money effectively. They read books, listen to podcasts, attend seminars, and seek out experts to learn from. They also stay updated on economic trends, market conditions, and investment strategies to ensure they're making the most informed decisions. To improve your financial literacy, start by reading books about personal finance and investing. Some great books for beginners include The Richest Man in Babylon by George Clason, Rich Dad, Poor Dad by Robert Kiyosaki, and The Intelligent Investor by Benjamin Graham. Additionally, there are numerous free online resources, including blogs, podcasts, and YouTube channels that cover everything from basic budgeting to advanced investment strategies. Make a habit of regularly reviewing your financial situation and learning about new opportunities. The more educated you become, the better decisions you'll make, which will lead to greater wealth in the future. Another critical factor in the millionaire mindset is the value they place on relationships and networking. Wealthy individuals surround themselves with like-minded people who share their values, goals, and mindset. Millionaires understand that success doesn't happen in isolation. They seek out mentors, advisors, and peers who can offer guidance, support, and valuable insights. They also invest in building relationships with professionals, such as accountants, financial planners, and business partners who can help them grow their wealth and manage their investments. Networking also provides access to opportunities that might not be available otherwise. Many millionaires get their start by connecting with others in their industry or field. Through networking, they can discover new investment opportunities, business ventures, and even job opportunities that can accelerate their wealth building process. To start building your network, attend events related to personal finance, investments, and entrepreneurship. Seek out individuals who are successful and can provide you with advice and mentorship. Join online communities and forums where you can learn from others and share your own experiences. Remember, building meaningful relationships takes time, but the benefits of a strong network can be enormous in terms of knowledge, resources, and opportunities. The secret strategy that millionaires use to grow and sustain their wealth is not about finding quick fixes or following the latest trends. It's about having the right mindset, developing sound financial habits, and being willing to work consistently toward long-term goals. By adopting a growth mindset, practicing patience, staying consistent, investing in your financial education, and building a strong network, you too can create and sustain wealth over time. The road to financial success is not a sprint, it's a marathon. But with the right mindset and habits, you will be on the path to wealth and financial freedom. Start today. Stay disciplined. And remember, the journey of building wealth is just as important as the destination.